Good evening, everyone. My name is Attorney Ed Berkman, and welcome back to the Common Law. Here at the Common Law, we like to take everyday legal issues and make them more digestible and easier to understand for everybody. Now, as we discuss these legal issues, I just want to point out that although I am an attorney, I am not your attorney. The conversation I'm about to have with my guest is my guest this evening. His name is Dan Ventura. He is the president of Fairway Reverse Mortgage. And that's going to be the topic of our show this evening, is we're going to talk about reverse mortgages. Now, I know what some of you are thinking. Probably this has a bad taste in your mouth. Trust me, this is not your grandma's reverse mortgage. There are a lot more laws that have changed that allow these to be much more user-friendly and a lot less predatory. So Dan, welcome to the show. Thank you for joining me tonight.
Thank you for having me. I appreciate it. I'm very passionate about reverse mortgages and talking to people about what they're not, because they have this reputation as being just a really, really bad product that's a scam and predatory on our seniors. And while there were issues with that type of problems early on in the existence of the reverse mortgages, in 2015 they cleaned up their act, and it's a very viable tool to enhance a senior's retirement. Fantastic. And I'm just very passionate about getting the word out and educating people about what they can do and what they can and how somebody can benefit from one.
That's great. And so when Dan and I were talking before we started the show, he mentioned that Fairway is a local company here.
Yep.
So you're not calling a call center. You're going to call Fairway. You're going to talk to a real person.
Yes, sir.
And they'll answer all your questions and everything like that.
Yes, sir.
So,
it's definitely a face-to-face transaction that I've found, and educating, and it can be fairly complex, but we take the time and break it down and make sure all questions are asked and answered.
That's fantastic. Now, before we start breaking down the nuts and the bolts of reverse mortgage, there is an educational seminar that is upcoming?
Yeah. We're having a seminar at Michael's Harborside next Tuesday, September 24th at 12 p.m. And if you want to attend it, you can look us up at rethinkreverse.com and just send us a note saying that you want to come. And it's going to be about an hour, and it's going to have an amazing amount of content and real-life strategies and scenarios of how we have helped people. And it should be a really good turnout.
Great. Fantastic. So Dan will be there. Myself will be there as well. And so if you have any other questions that relate to the law, good opportunity to get my ear and Dan's, and we can set you up. So Dan, why don't we start this evening with you telling me in your own words, what is a reverse mortgage?
Okay, so a reverse mortgage is a senior mortgage. It's for someone that at least one person has to be 62 years of age and older. Okay, they need to occupy the primary residence. Okay, and they need to make sure they maintain property taxes and insurance payments on that home. Okay, so the way the process works, or reverse mortgage works, it offers an optional payment program. Optional payments, meaning you can choose to make a payment or you cannot make a payment. And we roll with what is called deferred interest. So do you know how deferred interest works?
No,
I'll give you an explanation. So if we have a loan amount of like $200,000, and say the interest on that loan amount is $1,000 a month, just keeping it in just round numbers. So you sign on sign the paperwork, close on the loan, you have a $200,000 balance. The next month that goes by, if you choose not to make a payment, you don't have to, there's no penalty for that, but the balance of your mortgage actually goes up $1,000. So that's what we call deferred interest, and how it makes it such a win for the senior that they don't have that required monthly payment. And a lot of the times we're paying off an existing first mortgage that was maybe a little too cumbersome for the seniors to handle. I had a conversation with someone a few weeks ago. She's like, I've got a 30-year fixed at a 4.5% rate. I can't afford that. And that's just the reality of it sometimes. It's, this tool, this loan offers a lot of options for a senior to unlock the equity in their house without that forced requirement of having to make that monthly payment.
That's great. So what is the benefit? So that deferred interest and that balance keeps on going up. What's the benefit for the bank. Like, why would the bank allow you not to make a payment on your mortgage?
Well, no one gets there's no free lunch, okay? So you have to pay the interest, and there's an upfront fee that you have to pay to HUD. It's 2% of the appraised value of the property, and while people think the closing costs are expensive on reverse mortgages, the protection that it affords the consumer is well worth the price. So the HUD charge, like I said, HUD charges 2% of the appraised value, and that allows you to lock in the terms of the reverse mortgage at the time you close. I don't know if you've ever heard horror stories of people that open up HELOCs, home equity lines of credit. Then we had a little bit of a downturn in the housing market, and they freeze those lines of credit. That was such a rampant problem in 20 and back in 08 after the whole housing crisis, that people had their lines of credit frozen that were going to use it for tuition, for college, for renovations, for things that they already had planned. So with the reverse mortgage, you lock in those terms at closing, and they are guaranteed to be there for as long as you live in the house and occupy it as your primary residence.
Okay, so that's what I wanted to get to. So if the bank is basically just going to get paid at the end of their life. So they're allowed to live there for as long as they're alive.
Yeah.
Or as long as it's their primary residence.
Right.
And then at that point, it's like any other lien on the house.
Exactly.
It just gets paid out probably from the sale during the estate process.
Yeah. So the loan, it's a due and payable clause, and when that's triggered is when the last person moves out of the house or passes away. Okay, so let's just take that same scenario that we were talking about with the $200,000 with $1,000 a month in interest. Well, let's say that goes on for 5 years. Let's just say the balance of the mortgage goes, from $200,000 all the way up to, say, let's be aggressive. Let's say $400,000. Okay, maybe it's a longer span of time. The value of your property is going up at the same time as well.
Yeah.
Okay, so the only time it really acts like a regular mortgage is at the end. You call for a payoff, whatever the payoff is, the bank gets satisfied, they make their money, they get paid all the interest that was deferred, and then the heirs or the beneficiaries do what they want with the profits. So
Great.
One of the major misconceptions out there is that you don't own your home anymore. The bank owns your home, the government owns your home. That's just simply not the case. You always retain title to the home, and you are always the owner of that property.
So it's the same mortgage homeowner relationship that would exist in any mortgage.
Any mortgage.
It is, by its definition, a mortgage.
It is a mortgage.
So it is, in Massachusetts, that is considered an interest in property. So they do, in fact, have certain rights as a holder of a mortgage over the property.
Right.
But there are so many laws. I mean, if you've ever refied or when you bought your house, you saw how big that mortgage is. All that is just laws on what they can or cannot do if you pay or don't pay.
Right.
So
Right. And while we're on the topic of the reverse, and it's not your grandmother's reverse mortgage, there was a lot of I don't want to say a lot, but there was a significant amount of foreclosures that were happening early on in the reverse mortgage program. Like I said, it started in 1989. Ronald Reagan signed it into law, and it was not that good. It was not that good, and there was no qualifying on those loans, which means that all you really had to do was be 62 or older, take a HUD-approved counseling course, which I'll talk about in a second, and sign the papers. But people were getting the reverse mortgage. They were taking all the proceeds out, and they couldn't afford to make the monthly tax payments on the property. And you're an attorney. If you don't make tax payments on the property,
takes your house.
They take your house.
Yeah.
So there's a lot of that went on, and the industry. I started in the mortgage industry in 2003. I didn't originate my first reverse mortgage until 2015, and that was after they made all the changes. Okay, so now we have something that is called financial assessment, okay, where people actually have to qualify for a reverse mortgage. It's not a lot of heavy lifting. The bulk of our seniors are on a fixed income, Social Security, pension, that type of thing. And that is usually enough to qualify for the reverse mortgage. But what we do is we look at what their income and their expenses are and make sure that they have enough left over to be able to pay all their obligations, and live comfortably.
So there's never going to be a situation, or there shouldn't be a situation, where the loan balance exceeds the value of the home. You're doing your
could.
research ahead of
It
Okay.
could, yeah. So let's say somebody gets a reverse mortgage when they turn 62. Say they live to 95. I mean,
Yeah, 37 years.
I don't want to live to 95,
Yeah.
but some people do. Okay, and that's the benefit of the loan, and why the 2% upfront fee is so important, because it's a non-recourse loan. So that means that the heirs and beneficiaries and anybody else, nobody's responsible for anything if it's underwater. So let's say the balance of the loan in this case was, $700,000, and the value of the property was $600,000. You do a deed in lieu and transfer it over, and that's it. But one of the most important things that they put into play there, which I love, is that they recognize the sentimental value of a family home. Okay, and an heir or a beneficiary is able to purchase that home at 95% of the value at that time.
Oh, wow.
Okay, so they have the ability, like I said, even though it's underwater, they still have the ability to purchase that family home for 5% below the appraised value.
That's great.
Yeah, right?
That's really great. I didn't know that, but that's
Yeah.
fantastic.
Yeah,
Like, that's a huge, 5% in a home sale could be,
it's a 5% down payment.
yeah,
Yeah.
that's huge.
And for the memories and things like that,
Yeah.
and not having to come up with the extra cash.
And so
because-
in that instance, the bank is still willing to take a loss.
Absolutely.
Wow.
Because that's the insurance, and that's what the consumer is paying for.
I think,
and that's
yeah.
why it's powerful, right?
So I think we should also talk about that. So in that case of a loss, these mortgages are insured. So the financial institution isn't taking necessarily a loss on that.
HUD.
That's the insurance company. Yeah, HUD.
it's if they put in a claim,
He
they pay the
said
claim.
HUD. Well, we'll get to that in a little bit. So yeah, that's fantastic.
Yeah.
It's like a no-brainer. And in your example of the 62-year-old who gets a reverse mortgage and lives to 95,
Right.
all that 62-year-old is doing, and they could be getting continuous draws, or let's just assume they max that out.
Yeah.
So they've cashed out that reverse mortgage,
Right.
and they're now living rent-free from age 62 to 95, and all they're doing is basically paying property tax.
They're maintaining the property and
Yeah.
paying the taxes and their insurance.
Yeah.
Yeah,
That's great.
absolutely. It really is an eye opener when people, can cut through the negativity that what it used to be and take a look at the benefits that it offers. So in 2015, when I got certified to originate reverse, I was horrified that in 2015 that that there was still thought of as a really bad product. Then I realized, well, it wasn't until the changes that were just made. And nine years ago, when I got started originating reverse, I launched a website, Rethink Reverse. It's I like your statement there. It's not your grandmother's reverse mortgage. We say it's the the crazy cousin that you see at the family reunions and things like that you like to avoid. We don't like to talk about that, but I do, because it's important for people to understand why all those things were being said.
Where it came from.
Where it came from. The Tom Sellecks of the world, the Fonzies of the world did not help our industry and made it more into like
Like
it
a
was
cash grab. It was just taking advantage of people.
yeah, that's exactly what it is. And like when the consumers talk to the people that have these big advertising budgets, and they live in Massachusetts or New Hampshire, and they're talking to somebody that's in California or someplace, that doesn't work for me, because I believe that you need to be local and offer this product, because you need to be there for the clients for when things happen. I did a reverse mortgage for a client back in 2016. Mom was having trouble, needed help coming in, didn't want to leave the house, wanted to die and age in place in her house. The son was very skeptical about reverse mortgages, had hours of conversations with them. Long story short is they got the reverse mortgage. 3 years after that, he gave me a call, said his mom had just passed, and how grateful he was and their family was for her being able to stay at home until the very end. And I tell you, Ed, the emotional release that I see from our clients when they close and they take that pressure off of them every single month, either coming up with enough money to live comfortably, to the person that's using it as a strategy. They're opening up a reverse mortgage as a strategy, and one of the there's a few options to receive proceeds of a reverse mortgage. Okay, you can get a lump sum. 99% of the people do not do that because it comes with a fixed rate and there's no flexibility there. Some people will take a tenure, which is a fixed monthly payment that'll hit their account the first of every month. That was like the reverse, like reverse mortgage, where the bank pays you. Okay, so say a client of mine wanted to increase the cash flow that she was having coming in. She wanted to do some traveling, so she signed. She got like $25,000 at closing. She got a monthly tenure payment of $3,500 for 7 years. So 7 years, on the first of every month, she's going to receive $3,500. And then this is the best part about the reverse mortgage is the line of credit. Okay, we talked earlier about a HELOC and what a line of credit does.
So we'll just back up a little bit. What is a HELOC? Just what does that?
I get so excited about this stuff, so just reel me in here.
You got it.
A HELOC is an equity line. Okay, this is a regular HELOC.
So HELOC stands for Home Equity Line of Credit.
Yes, sir. Yes, sir.
So and a lot of people would do, back when interest rates were like 3% and you were refining your house, a huge selling point, and a lot of people did this, was you take out that HELOC or home equity line of credit at the same time you refinanced, and basically you just have a line of credit, like a credit card, against your house equity.
You do. And I recommended it. I have one on my house, and it's a safety net. Okay, you have a sudden need for cash. The roof blows off, the furnace blows, you need a new car. That's the significance of having a HELOC, home equity line of credit.
You lock in that lower interest rate.
Yeah, you get all that taken care of. But with a reverse line of credit, so let's just say, for example, round numbers again, when I'll just use the example from my client that had closed. She had a line of credit of $176,000, okay? The unused portion of that line of credit, that $176,000, each month that it remains untouched grows in value by the same amount of interest rate that you're being charged for the outstanding balance. So it offsets each other. So in 5 years' time, that 176 line of credit, if it remained untouched, is up to about 230, 240. And that money can be drawn at any time.
So it grows with the value of the property. So as the house increases, that line of credit increases, and thus you have more options if you need to redo the kitchen, or if you need just, let's face it, we're probably on a fixed income here, and house might be in disrepair, and they can do all kinds of things, landscaping, like redoing the bathroom, the kitchen.
How about renovating the home to meet their current needs? Like, say, stairs are becoming a problem. We all hear that. It's got stairs. My mom's 70. Let's put in that chairlift if that's what it is. Let's renovate if there's ramps that are needed. Let's free up that cash so we can have somebody come in 2-3 mornings a week, clean up the house, make them breakfast or whatever. And that's the type of release and relief that I talk about, that I see in the consumers' faces. I'll just tell you something real quick. We had a closing maybe a month ago, and woman was in her 70s, and I tell you, Ed, the look on her face when we were done, and that big appreciable sigh, and she said, "I don't have to work anymore."
Yeah.
She went back to work because she just wasn't comfortable with her retirement and what she wanted to do. She got the reverse mortgage, immediately booked a trip, and it changed everything. And she was referred to me by somebody else who had the same exact experience, and how game-changing it was for them to just unlock that equity and have access to it whenever you need it.
Yeah, I think especially nowadays where home values are so high and property value, like in this city alone, like property taxes are going up.
Up and up, right?
Up and up. And so it gets tough for everybody having to pay those property taxes. So, and it's all like your livelihood, your comfortability day to day is really down to your monthly expenses.
Right.
So even if you were back when the rates were really low and I was doing a lot of refi work, I was saving clients like $400 or $500 a month just refining their house. It's like now they have an extra $500 a month to play with.
Right.
And that's huge.
It is huge.
So imagine taking a bill. Imagine if you at home, you have a bill, and it's your mortgage payment, and it's whatever it is, $1,500, $3,000, whatever it is, and that's gone.
It's gone.
It doesn't exist anymore.
And you can't fathom.
And you're not moving. You know, you're gonna have some money coming in, and you're gonna have a better, comfortable living situation,
Right.
and you're gonna have kind of a better monthly budget.
But what you can't put into words is that peace of mind that the senior gets. And, you know, the strategy now is that, you know, when the days of old, grandmother's reverse mortgage, there was a paradigm shift where it's becoming more want-based than needs-based, okay? There's options there. You know, there's really a lot of crazy things you can do with them. One of them, you could defer or delay your Social Security to an older age where the money's higher. That's one option. There's a strategy where you can convert your IRA to a Roth IRA and use the HECM proceeds to pay all those taxes. Okay, so when they start drawing the money, it's already been taxed, so it's already done. You know, there's just a lot of uses for it.
What we're trying to do here, and what you're trying to do it next week, is educate people. Because there is such a bad stigma associated with this.
Yes, sir.
And there's so many people that they'll hear it and they'll instantly dismiss it because they're like, oh, that's right. I know somebody who got ripped off 25 years ago from a reverse mortgage.
Right.
Like, you know, someone's mom did one, and
right.
like they took the house and they booted her out, and
terrible.
That doesn't happen anymore.
No, it really doesn't. I'll tell you a funny story. Is when I, you know, like I said, in 2015 I started originating them. I was really on a mission, and still am. I put on a seminar right over here in the senior center, and had no one come. No one. Nobody.
I've been there.
No, it had nobody there. Well, that's not true. There was one gentleman that opened the door and said, "What are you selling?" I'm like, "Reverse mortgages. They're a scam." And he walked out, and I was like, "Oh my God." I went running after him, like, "What are you talking about? Like, tell me why you feel that way."
Yeah.
You know what I mean?
I mean, I remember the day that I was convinced that it's actually a productive product for somebody in certain situations where I was closing a handful. Wasn't our primary, you know, business, but we would occasionally close out reverse mortgages, and sometimes you would still, and this is earlier on, so you would see like, oh, maybe this isn't going to work for that person, or they're just gonna take the money and maybe not use it wisely, and probably not the best idea. And I come from my legal standpoint does a lot of mass health planning, so I'm all about preserving assets for the next generation. Which doesn't really help the person. It helps your family, but it doesn't really help you.
Right.
Like getting qualified and protecting assets for mass health doesn't protect the applicant of mass health. It protects their family,
their heirs,
property after they pass.
Right.
And so I've always sort of have that lens on, we should be protecting property because, you know, a lot of times the house is the only thing they can give somebody.
Right.
And so like now it's like, well, we're not able to give them the house anymore, especially if you don't have a mortgage on the property.
Right.
But that doesn't help you. And, you know, I think your family and everybody would just rather you be happy, healthy, and, you know, not stressed over making, the bills and are you going to eat this week?
Right.
You know,
exactly.
Just makes it easy. Everybody's happier, and that 95% is a steal.
It really is.
Makes
it really is.
tremendous sense. But when I had met with these clients, I was closing out their reverse mortgage. They had a couple properties. They had a house in Revere, and they had another property. So they already had their kids' inheritance locked up. And they explained to me, is like, well, we're just doing this so we can live in here in the Riviera. It was a nice house on the water.
Sure.
And we're just going to live here for the next 25 years rent-free.
How great is that?
Yeah. And now we bought a house in Revere Beach, and we're on fixed income, and now we have money that we can go out and enjoy it. We can enjoy our retirement. We're not stuck there on the $1,800 a month Social Security, and half that's going to the mortgage.
Right.
The kids have an inheritance that's all locked away. That's something separate, and you now have you're living for free. You're paying the taxes, and you got to pay insurance and other things like that. But you're not making a mortgage payment anymore.
No, you're exactly right. And to have that type of freedom and not that worry, I mean, it's just a better quality of life. Like, people open in reverse. What are the main reasons people do it? Renovate their house, make it more accessible, put in a pool,
Yeah.
attract the grandkids to come over.
And when you put it into the house, that's increasing the property value
Right.
as well.
Right.
And so when you do your evaluations, making sure like they're not over borrowing.
Right.
Now, like they're still going to be left with something. It's the same as any other mortgage on a property.
Right.
They're not gonna take more than what they're owed. They're gonna take what the lien is.
Yep.
And the family gets the rest,
Yep. Yep.
which could be hundreds of thousands of dollars.
Which could absolutely, and oftentimes it is.
Yeah.
We'll get calls like so and so's. They're buying a house. There's a reverse mortgage on this. What kind of hassles are we going to have? I'm like, just order a payoff.
Yeah.
Order a payoff. That's all you got to
Yeah,
do.
it's treated the exact
it's the
same way.
thing.
Yeah.
And it really goes to the part of educating that it's just constant, and I love that.
Consider instead of just running out and getting that HELOC or getting that second mortgage,
Right.
Or whatever you're trying to cash out equity at your house, whatever the traditional means are,
Right.
It's worth a conversation. I think, folks. I think it's worth talking to Dan. I think it's worth going to this seminar. When's that seminar again?
It is next Tuesday, the 24th, at Michael's Harborside.
Okay, and it's free to attend. You don't have to buy
Come in,
lunch or anything like
grab
that.
a sandwich. We'll have food and we'll take care of everything.
Fantastic.
That's what we do.
Yeah.
Yeah.
All right. Well, Dan, if you don't mind, I'm going to put his information will be on the screen below, as will be mine. They'll be sprinkled in throughout the entirety of the show here this evening. Dan, anything else you want to say on reverse mortgages?
No, I'm just grateful for the opportunity to speak to you in this format. I thank you.
Dan, you've been great. Thank you so much for joining us this
Yeah.
evening. It's been, I think, super educational.
Thank you.
I think even if you can't make it on, what's that date again?
It is September 24th at noon at Michael's Harborside.
So if you can't make that, I think even watching this or sharing this with people, the show is also on YouTube. If you're watching it live right now on the Newburyport Public Access Station, if you have a friend or a relative or someone that you think would benefit from this conversation, send them the YouTube link, especially if they can't make it on Tuesday.
Yeah.
So
yeah, and we have tons of content material
Yeah.
that we just love to educate
And Dan's
people.
a great guy. Like I said, his email and his phone number are right down on the screen. Give him a call, write him an email. I'm sure he'd be more than happy to help you.
Yeah.
And if you use my contact info, I can hook you up with Dan as well. So there's no reason not to inquire. I'm not saying this is for everybody. I'm saying there are some things that we have to look into. But it's definitely worth a consideration.
Yes, sir.
All right, Dan, thank you so much for your time this evening. This was fantastic.
Appreciate it.
All right. Well, that's going to wrap things up for us tonight on the common law. I'll see you next time as we discuss another legal issue. Good night.